All right, 3, 2, 1. Do you want to kick us off this time? I'm gonna go quiet and let you
go right ahead, Otto. You've been the impresario of this episode, so you should just get us going.
As the impresario officially. Okay, then I herewith welcome everybody to our episode number 3. Is there merit in meritocracy? I mean, we should get some prize for the most insightful session titles, I feel, looking at some of the comparators, if not anything else, Michele.
Yeah.
But I would suggest it's probably going to be an exciting conversation. And why? Because I had many conversations over the last month or 2 or 3 where this notion of meritocracy, especially in the Anglo-Saxon world, was coming very strongly under threat. And I know it's one of the cardinal principles in Humanocracy in your book. So I think it's going to be very interesting to disentangle a little bit the societal, the organizational, the individual correlations of that concept. What does it actually mean? What does it mean for every one of us? And then how can we use it in a good way, potentially, in the organizations that we want to build? So I'm very excited about this topic today. And hopefully you are as well. As usual, we will, in terms of agenda, go firstly in a few news items and again share with you what caught our attention over the last 2 or 3 weeks. And then to get into the topic and then hopefully have time for Q&A from all of you guys. But feel free to shoot any questions via the chat function at us whenever they come up for you. Or also just have a conversation between yourselves. It is as important to create the networks amongst yourselves as the listeners as it is to pay a little bit of attention to Michele and I having a good time by some intellectual challenge and food for thought here. And with that, I would say, Michele, 1, over to you to position the episode from your perspective. And secondly, we could go straight into the news if you want.
All right. Yeah. All right. Thanks, Oti. And thanks, everyone, for joining us. This is the committed, diehard group that is with us in the depths of summer. Instead of going to the beach, here you are, participating in this episode, or maybe you're participating in this episode from the beach, in which case, kudos to you. But yeah, so meritocracy is a very interesting topic. Oti and I have been talking about it on and off, for several months. And, even as, it is a cardinal principle, as Oti mentioned, of our book. And I remember people reacting badly to that when they saw that, right? Because it was, as Oti mentioned, especially in the Anglo-Saxon world, meritocracy has gotten a really bad rap. And so, but hopefully today I'll try to explain why I think what we mean by meritocracy, how we apply that concept, and why we think it's something to be striving for, especially in organizations, right? So if there is this kind of like, as Oti mentioned, there are these different levels at which we could talk about meritocracy. Is it a good idea? Are we actually achieving it? What is the alternative to it? Society, at the level of society, and so on. And we can certainly have a debate about that. But I'm personally interested in thinking about that at the level of the organization, like, and as we'll get into it later, I think that it is a good idea, but we're woefully short of realizing it. And there are things we can do if we change the way we manage, lead, and organize where we can achieve it. But so that's just my little kind of preface to this. But before we get to the main course, we're gonna have a few news appetizers. Oti, do you want to go first, or should I just go? What do you think?
Or if I can have the first, I was hungry for this moment.
Go.
I'll go with the first one. I need to share this one. I mean, everybody has seen it, right? So kind of Branson did his very best to come in, what was it, 5 days before Bezos into the ridiculously not outer space, whatever, 10 kilometers above ground level or something, spending billions. And what is the ticket? 200K for an 11-minute voyage into space. Let me just ask you, Michele, are you on the list already? Have you got a free ticket, or are you paying for the ticket? What's your plan?
I'm on the wait list. I hope, do you know the story that there's this Dutch guy, like 19 years old, that got put on that flight with Bezos because the millionaire who paid, I don't know, $20 million to be on the flight had a scheduling conflict. And so he basically, the guy, I don't know, Yeah, he had to do a meeting, and so he didn't basically said, I can't make the flight because of a scheduling conflict after having doled out a ton of money. So this random dude from the Netherlands, a 19-year-old who didn't pay anything, got hitched the ride. So I'm my plan is to do that, not to pay for it. But anyway.
Oh, I mean, I have to say, my opinion is very simple. And there were some memes which came up within hours of the launch, which said, kind of, save planet Earth before you go to fucking Mars. And I mean, that is me, right? So as far as I'm concerned, even the rocket looks like a phallic symbol. So as far as I'm concerned, this is ego play. Whatever you tell me about the fact that, yeah, it might further innovation and bring the NASA back on their knees, because now Bezos apparently has given to NASA a few million to actually allow them to go back into space recovery or whatever. But as far as I'm concerned, there's so many issues with planet Earth that a little bit of prioritization wouldn't do us badly. But that's my opinion on this. And anything else before I move to my number two? No?
Number two, I'm surprised. Are you sharing your screen? Are you sharing the? I thought you were going to share the. I thought you were going to share the phallic, the phallic rocket, but I guess you didn't. I guess you didn't do that.
Oh, I was sharing the screen, but it has the celebrating kind of Richard Branson on the Financial Times heading. But at this point, let me ask, can people actually see that I'm sharing the screen? Let me check the chat.
Yeah, I know you are. Sorry, Ati. It was my, I was,
saying thumbs up. Right. Okay, super.
Cool.
All right, okay, super. And so I'll do one more, and then if you want to take over. Oh, no, this is for later. This is for our discussion about meritocracy, because I did a little research to figure out how many ocracies are there, because krasi in Greek means form of government. So between adhocracy and whatever other krasi, democracy and so on, what is there and how are they defined? And I found this one website, which I'm going to share later again, where you actually have a comparison. And I think there are like 40 different forms of governments that you can, so 4 pages worth of, well, even more than 40 maybe, where you can see some forms of government I'm sure you've never heard. I wanted to give 2 forms, actually I'm going to do 2 forms of hope are coming out of the pandemic. So one, Wizz Air, right? So this lovely budget airline from Hungary that is based in the United Kingdom is expecting to come back to pre-COVID passenger levels. And I think, I mean, beyond the fact whether people should travel or not, which I don't kind of want to make a statement on, because I think there are many pros and cons. But I think the fact that the travel industry is recovering is not only for that industry, but for all of us, I think a hopeful sign of recovery. And similarly, here's OPEC. OPEC is an interesting beast, right? I mean, over the many decades that we have been looking at OPEC and trying to figure out how oil price move, right? And nobody has that wisdom yet. It was quite interesting that they even got Saudi Arabia to come and Russia to agree to an increase in the amount of barrels produced every day, because prices are shooting up, creating inflation. And there's been a great recovery in many sectors, in particular industries like construction and so on. So 2 hopeful signs maybe of some recovery after the pandemic. I have a few more, but I'm going to hand over to you first, Mikkel.
All right, I'll do a couple. Thanks, Odyssey. Those are really cool, and I'm glad that you are hopeful, because I'm gonna have a few that are instead like Debbie Downers, so we can compensate each other. Let's see. So first is this article came out late June, but I just saw it recently. You know, we had, and I think in a previous episode, we talked about disclosures and how it's actually an important pressure point to get companies to take, you know, certain things seriously, like environmental responsibility or how they treat their employees. I still believe that, but this is an interesting reminder that you know, metrics by themselves are not going to be enough, because, you know, they can be twisted. You know, they can be quite inconsistent. There's interesting. This is a Quartz article. We'll share the links after, you know, on the episode page, but it talks about the fact that, for instance, you know, what ESG score is more related to the number of metrics that you disclose, as opposed to whether you're actually doing well on the metrics.
Incredible.
You know, the fact that even though you're reporting the CEO to median employee metric, that hasn't done anything at all to reining in the differential between CEOs and employees. And, you know, the fact that, you know, you can basically use these as a fig leaf to cover an action. So it's a good reminder. I said I think this is still an important leverage point that we should do more of, especially when it comes to organizational effectiveness and how you're treating employees and how much you're tapping their ingenuity. But anyway, so that's one. The other thing, the
But I
other
think
one,
on this one,
yeah, go ahead.
one thing we keep on this one. One, I think and John Ingham is here. John, if John is still there at the Q&A, we'll ask John to comment, because I think John is doing a session on performance management masterclass, I think it's called. And I think, I mean, the evidence to show that CEO pay is not supportive of long-term sustainability and company results is so damning that I still don't understand why this is going. And John was just putting an article of the FT on the chat, where he points out that the Wizz Air CEO was offered 100 million kind of extra incentive to increase numbers, right? And I thought we were beyond this, so to speak. And the second point that might be interesting for people is Alex Edmonds, who's a professor, finance professor of London Business School, and a really a very, very clever young professor, actually, who has written a book, Grow the Pie, is showing that following ESG metrics is also something that should be kind of taken with some intelligence. So certain facets of the ESGs are more relevant for certain sectors or companies. Sure. So people should not just try to tick the box on everything, but they should look out for what they can actually impact and influence. And then he shows that the return is also supportive of doing that, which again, I don't even want to add, because people should do right because they want to do right, not because it helps the bottom line.
Right, exactly. Yeah. So anyway, we said that we might want to do an episode on metrics and ESG and all that stuff. So we might well do it. But anyway, this is good fodder. There's an article that came out a couple of days ago in The Atlantic, which is like a highbrow magazine in the US, about the fact that government bureaucracy is getting worse and complicating the lives of citizens, and basically the amount of time that people need to waste dealing with the labyrinthine procedures and of all facets of their interactions with the government, not just the DMV, which is the registry of motor vehicles to get your license or whatever, but also healthcare, Social Security, and other things, is just getting worse. And there seems to be it's a very interesting article. I mean, short, I guess, on diagnosis, but some of the examples and some of the papers that they link to are interesting. And it's just a general sign of, I guess, bureauclerosis in public institutions, which, I'm from Italy, so like I've seen plenty of that in my home country, but in a way, things have gotten worse in the US as well. And I mean, we might have talked about in the prior episode of the fact that some processes in the Defense Department, like around budgeting, where they allocate almost $1 trillion of funds every year, are still running on the processes that and the designs that McNamara put together in the 60s. This is just another example of just governments, relying on bureaucratic procedures and reflexes, and making maybe their lives easy, but complicating horribly the lives of their citizens. So anyway, so those are two.
There's a new ocracy. There's a kludgeocracy in, I think I just saw it in school.
Yeah, exactly.
That's really funny. Which reminds me of South Africa, right? If you look at the crisis in South Africa, the commentators are attributing a lot of that to the cronyism that came out of the ANC after the Truth and Reconciliation Commission 20 years ago, whenever it was. So again, I think it might be a trend in some of the governments that we know of.
Right. Yeah, and a lot of the discourse in America is really about like, how do we empower Congress to improve the lives of citizens and change policy? But there should be more emphasis placed on like, how do we re-engineer this huge administrative structure in a way that is customer centric? And in our book we talk a little bit about, I mean, maybe you don't have the same level of dysfunction in a lot of companies because there is market pressure. And if you're like horrible, well, I mean, you can be horrible, get away with it in some sectors, but in general, there's some mitigating effect from just being in a competitive environment, but it's pretty pervasive, right? So anyway, so those are a couple. I have a couple more, but do you want to just, I'll hand back the baton to you, and then maybe a couple more. And
Okay,
then
I'll rush through. Oh, you will need to give up the screen sharing because you're a
Okay.
host.
Okay, so yeah,
And
there's like management 1.0 assumptions built into Zoom. It's like I'm the host.
yeah, exactly. Yeah, so dear boss, could I
Yes,
for
I
a
will
minute
empower you,
have-
Otti. You can share your screen now.
And then I'm always saying, right, don't never forget that people are not empowered. They choose to be empowered. So I think we have a perfect match at the moment. This was the article that John shared earlier, if you are interested in that. But let me go back to, and John has shared a second article, which might even be stronger on the ESG metrics in regards to the pay of with their CEO. So here, one thing that just caught my mind, Robin Hood, and going after a 32 billion IPO, which again, I just thought it was so oxymoric to a degree, right? So these guys at Robin Hood, they want to give the power to the small people. And I think this trading that they created 2 or 3 months ago was to a degree actually succeeding in that. And here it again seems as if they just want to cash in on the idea as much as they possibly can. Whereas I thought here's another one, Facebook, right? 29 billion record profit, blowing all expectations. And I think we've seen that from some of the technology companies, including Twitter. But interesting enough, the Facebook share price dropped by 4% because analysts' expectation was they cannot replicate this throughout the year. In the same vibe, Revolut, here with the most valuable fintech in the UK. Many of you will know that, of course, I'm from banking. So here you've got the Russian and Nikolai Storonsky, who is the CEO and who's now worth 7 billion. Interesting, right? Because the thing still doesn't make any profit whatsoever. I think it was over 100 million loss in the last financial year. But I had one hopeful one that I wanted to share with you because I know you like it. Here, index funds. And then I close with that interesting one on Pegasus. Index funds, I thought you would like this, Michele, after your news on the more sustainable stock markets. So here's a new fund, and actually their stock market sign, it's an ETF, is called Vote. And what they're trying to do is to amass votes of people who care about good governance and shareholder rights as much as ESGs and sustainability. And actually by amassing the votes of normal people who invest in this ETF, they will try to go in and force the hands of some of the big companies who are still not taking ESGs and other indicators seriously. And actually they managed by only having 4.7%, I think, of the value of Exxon to influence the other, or it might have been even less, the other necessary shareholders to get 50.1% or 51%, and actually oust free people from the board of Exxon so that they can go after better policies. I thought that was very interesting. And I will certainly look out for that ETF.
Yeah. I mean, we talked, I think, a little bit about the engine number. What was it? Engine number 9.
This is engine 1.
Sorry, yeah, 1. I don't know why I was thinking 9. Yeah. Which, obviously they had a tiny amount of Exxon shares, but they persuaded BlackRock and Vanguard, right, to vote with them on the proxy. Yeah. I mean, it's good. I think, investor activism, whether it's from retail investors through an ETF or activist investors can be, institutional investors can be positive. It's not all bad. And we just got to take action and not wait for others to change.
It almost links to a deterministic theory of change. So I was talking to someone recently who suggested that the companies that own 90% of the world's asset are about 1,000. And then looking at the structure, the governance structure of these companies, he said there are actually 427 companies that control these 1,000.
Yeah.
And there are companies like BlackRock and other pension funds and so on in between. And he said in each of these 427 companies, there are 3 people who really have the power in those companies. And don't kid yourself, they're all male. Right? So he said you can do kind of almost simple logic and say that there are 427 times 3 people and probably 5,000 people around them who can influence them.
Yeah.
So that's your crowd if you really want to go after individuals who have power to share things.
Yeah.
But on that notion of power, I will close out and hand back to you, finishing with this. So if you're not entirely certain, and I think more Michele, you than me, whether you've been Pegasus infected. And I think this is incredible, right? So Pegasus being this, or being produced by this Israeli security firm, spyware, which on behalf of, it appears, a lot of very doubtful companies, they've installed on the telephones of people who either were politicians or who are potentially critics of respective governments, and have been looking into all their phone calls and all their messages, right, using the spyware. And there were people like the French prime minister on the list, but equally many kind of activists and journalists and other people in some of the less kosher, not democratic states around the world. So here is on GitHub, and again, talking about open source, I'm a big fan of GitHub. You can go and download a software that will allow you to decrypt your phone and then figure out whether you've been infected, in case you're such an important person that you might be on their list. And with that, I hand it back.
Cool. Yeah, this is just one aspect of how surveillance, through IT is just creating all sorts of like problems, including in the workplace. But let me share a couple quick things, and then we'll pivot to the main course. So this is a cool article on this website called Lawfare. It's a national security website, and they talk about using prediction markets to understand and assess the likelihood of different geopolitical events, including like Lukashenko, who's portrayed here, Prime Minister of Belarus, whether he will be toppled or he'll leave at the end of the year. But it's a very interesting article about the history of using prediction markets in government to predict national security developments, but also in companies, and the pros and cons, and why they haven't been maybe been adopted as much as they could, given their promise. Anyway, so I suggest you guys, if you're interested in this topic of crowdsourcing decision making, this is a very good summary of that. So that's one. McKinsey just did an interview with Zhang Rumin, the CEO of Hire. It's a good interview. If it might be worth your time. But I wanted to. They posed a question to him that we've posed him many times, which I wanted to focus your attention on, which is sort of basically they're saying, well, Mr. Zhang, Hires obviously has a really interesting model. It's very successful. Why is it that it's so rare, right? And this is what he says. He says this, adopting our model requires giving up power, including decision making. You must delegate all those powers to the micro enterprises themselves, the little operating units within Hire. One boss asked me whether he could control his employees without those three powers. Well, I believe that giving up control is actually an important part of the model. Okay.
Yeah.
And when he doesn't get like super philosophical. Like I asked him that question once, and he started mentioning like Hegel's principle of like self-denial, and he goes all philosophical, and it's just like an amazing character. But he, it's like he cuts to the core. Like in the end, like to create a model that is enabling other people, at the end of the day, you have to redistribute power. There's no way around it. And Absolutely. It doesn't have to be a zero-sum game. You can actually thrive with a different kind of a role in the company as a leader, right? Or as a leader, as someone with a position, in position of authority. But that's the crux, right, of the problem. Like it's enabling these kinds of models requires a shift in power. And turkeys don't vote for Christmas, as they say, right? And that's sort of that's a fundamental building block. The last thing,
I think one other thing that strikes me, Michilis, and we were just talking to Alicia Henning about exactly this point, is that Hire is very singular, even in a Chinese context. Mm-hmm. Right, so Chinese, she's saying are ultra capitalist and ultra competitive. So frankly, this type of model is not something that is easily found in China. Secondly, like you say, this rule of three, right? That is kind of hiring and firing, decision-making, compensation, I think is really the crux of the decision-making. And if we compare to Zappos and what Tony Hsieh did, it's very interesting how they approached that at the end in a very similar fashion. But the other thing that always caught my attention is that what Alicia said is that Haya also is very focused on the Taoist principle of be like water. And this be like water being the attitude of humbleness, the attitude of being of service, which resonates to a degree also with companies like Burzog and so on. So there's a very strong culture that I think nurtures this letting go and being of service to the system, which has to come accompanied, I think, with some of these structural decentralization metrics or measures, interventions, because otherwise you might find yourself in total competition even.
Yeah, yeah, it is a very interesting, it's a fine balance, because they are hyper capitalistic in the sense that these micro enterprises, many of them, are separate legal entities where the employees own a big share. I mean, sometimes the majority, sometimes the minority share of that little unit. And so there are high powered incentives, but as you say, there is a fair amount of social capital and commonality of values, so that it doesn't become this atomistic competition between different units inside, right, which could tear the company apart. And it's a very difficult balance to strike. I mean, the other thing, that just to build on also the notion of values and philosophy as being core, the other thing he says is this: like, first you should understand the purpose of Renan Hoy, the way he, basically the way he talks about the higher model, and then apply it in your local context, right? And he goes like, the instinct is to just copy what we do, but that's not how you do this, right? How you make change that sticks. What you need to copy is how we think, right? And our principles, and then you apply the which is, and we can get into probably in another episode how, if people are interested, how GE Appliances, which Haier acquired, their story of how they applied these principles, or how Haier has done this at Sanyo. They bought Sanyo appliances in Japan. And so you can imagine in Japan applying, these kinds of principles of entrepreneurship and, high powered incentives. It's like, completely foreign.
It's very interesting.
Yeah. Anyway, so
right, because
but
I think GE Appliances is much more a matrix organization than
right.
Haier.
No, but it's very interesting, because like Haier didn't go to Kevin Nolan and his team at GE Appliances and say, this is how you're going to do this. Like, it's like,
correct.
They basically said, you need to understand like where we're coming from and what the logic of this is, and then you got to figure out how to do it. Right. So anyway, it's like,
and one other thing. Yeah. Sorry, Michele, I'm throwing in one more thing, which is I think we've seen the same phenomenon with other trends and methodologies like total quality management, right, or Kanban and Kaizen and so on, right? I think the only company that was able to import some of these Japanese techniques was Toyota. And one of the key learnings was they only hired people who were in line with the philosophy. Because so they didn't hire for skills, as many of the Western companies always do. They hired for being able to be embedded in that type of overarching philosophy. And I think that's an interesting learning.
Yeah. Anyway, so yeah, that's very good, Bill. But I'm just saying, like, what he's saying is diametrically opposite to what you might read in other articles from, consulting firms saying, you got to, and you were at ING, right? So you were in maybe at the receiving end of this, or maybe you helped inspire this kind of thinking. But it's like, oh, you gotta basically cut and paste what Spotify does, right? It's like cookie cutter. You just take what they do, and if you do what they do, and you call people Scrum Masters, and you have guilds and tribes or whatever the hell, you're gonna be agile. It's like, no, like maybe that won't work for you. You got to start with the principle anyway. Last thing, and then we'll pivot, but this is maybe like interesting setup. So it's a Twitter feed. So this guy, Wesley Yang, and he cites real data saying that CEOs of large companies in the US are far taller than the average people in the US, right? And then this guy who works at Microsoft, Trent Griffin, says, if you look at some of the entrepreneurs, and it's not a comprehensive list, but a lot of the entrepreneurs are less than 6 feet tall, which is what, I don't know, is that 2 meters? Maybe a little bit less than 2 meters, 190 or something. Anyway, and I think the point he's trying to make is that if you're an entrepreneur, you don't have to kind of be a bureaucrat and like climb the ladder and persuade and bullshit people about your ability. You just do it. And so like, who cares how tall you are? But if you have to go play that game, right, and become more successful, then looks matter, maybe height matters, right? And it's just like a little sign of the fact that maybe we don't promote people based on their ability. Maybe we promote people on other factors, right? Which we'll now kind of dig into as part of meritocracy. But I thought this is kind of funny. All right.
Which leads me to, or which brings up another thought, which was actually, so whenever you talk about people's physical characteristics or even IQ and try to correlate it to anything, you're of course getting a bit on a slippery slope very quickly, and people object to that kind of thinking. But there are some studies out there, and one was that actually people who are, and don't ask me how they measured it, but who are more closer to the ideal of good looking, right? Yeah. And in regards to the physical shape and proportions and so on, seem to be much more endorsive of the idea that the current society is meritocratic. And kind of, so there seems to be a degree of correlation with, I'm actually kind of well off and behave, kind of getting myself into a good position in the current system. Therefore, the position must be good. So I think this notion of bias might even be induced by some of physical characteristics.
Oh yeah,
yeah. Kind of, and on the small people, I mean, we know Napoleon, right? So maybe there's a narcissistic trait that is correlated with that, but I don't want to venture off on territory that I'm certainly not expert in. But though, okay, the main menu is what you said, Michele. So allow me to position this, because Michele and I, as you already heard, thought this was a complex topic because there's so many different aspects to it. And you could see, I've been trying to kind of, in line with not only Michele and myself, but I'm sure everybody on this webcast, right? Feeling a little bit radical in a sense of radically inquisitive and curious in nature, and trying to look at things from different perspective and query where the truth is, right? So this investigative, critical thinking. I was trying to get a little bit more provocative. And again, I invite anyone who for the future topic has some ideas to come to us, or even create these things yourself, right? And help us to kind of look at different perspectives. I was trying to polarize the conversation here a little bit, right? So one thing that I think, especially in Michele Sandel's world, Michele is not Italian. Michael Sandel's work was coming up in the tyranny of merit. Michele Sandello, the tyranny of merit. Was this idea that meritocracy today is very harmful potentially because people start to take it seriously. They start to think that because of where they are and who they are, they merit it. And they don't take into account very often that they come from very privileged positions, that they had a lot of luck in their lives and so on. And there's a certain arrogance and also this notion of, if you are good and you work hard, so this notion, merit is the basis of your IQ and the effort you put in, and maybe some other factors. And we will come to the money aspect in a second, right? So if you work hard enough, you can get to where you deserve. Therefore, if you are not where you deserve, it's your fault. So this type of narrative in society, Michael Sandel certainly believes is very problematic and needs to be looked at. Whereas I think another author that came out very recently, which is Adrian Wooldridge, who has written about the aristocracy of talent, and who is suggesting that we've created a mechanism by which the people who are rich are perpetuating their dominance in the important positions in society and business. Why and how? Very simple, because we have created a system that is based on intelligence and effort, but also standard tests. And if you are from a privileged position or from a privileged family and you have money, so this is where the money aspect comes into play, then you can invest a lot more time and effort and kind of attain better results from training yourself up to sustain those tests, right? So just think about you're kind of a Hollywood actor, you've got a lot of money, you will make sure your children are in the best possible schools, they get all these site teachers and training, and even maybe some bribery, I hope not, to get into the SAT test in your preferred university, etc., etc. And this perpetuates throughout generations, right? So he's saying there's a new aristocracy of talent, which is clinging to these positions and able to do so because they have more money. And there's a cultural aspect to this, which again goes back to another problematic aspect of this, kind of how do we measure merit? And in the current culture, merit is often equal to wealth and status, which is arguably a very narrow description of what merit in today's society should be. Right? So who says that the person who has merit only is the one who has got a big bank account? So on this kind of radical positions that I was framing here, I'm not going to go through the details. And again, they will be on the website afterwards for you if you want to look at. I've tried to just pull out a few points that are on both sides of the argument, and then I will hand over to Michele to position it from his perspective. So what are the pros of meritocracy? Well, very simply, meritocracy was a great invention because 2 centuries ago, we wanted to get away from a system that was perpetuating nepotism, where the aristocracy or people who just by birth had certain rights and privileges were getting all the good positions in our society. And meritocracy was saying, no, sorry, after French Revolution, that must stop. We need to select the best people, the brightest, the best, the most professional into positions. Why? Because frankly, then all of us will benefit. If we have the greatest minds and the most important positions, then things will run smoother. First point on the list. So meritocracy somehow, by putting the best people, best qualified into the best positions in society, all of us will benefit, right? And I think Michele will also demonstrate that the bureaucracy, conversely, which is not meritocratic, will create a lot of costs on the state. And the example that Michele shared in terms of the US administration certainly points towards that. Secondly, there's this American dream notion, right? So if it works, then really you should get as much out of the system as you put in. Right? So there really should be an equal playing field. So the harder you work, the more you should get. So you get what you deserve because you deserve it. You've worked for it, right? And finally, there's this notion of an elevator that by many people working hard, even if even if we don't work as hard, we will get better because it benefits us all. And a true meritocracy, people argue, is one that tries to level the playing field. So actually, a meritocracy is also anti-discriminatory. Right, so it will take into account that certain groups in society have less of an access to equality in regards to their merit, and will try to take those things out of the equation. So they will do their very best to make sure that everybody has the same or equal access to being the best that they can become. And finally, there's also a notion in regards to organizations that a meritocratic environment is one that it's actually generating ideas. It's generating information flows. It's where everybody gets their voice in. Every voice has value. Every employee can contribute. And therefore, it's becoming more innovative and also more participative. And therefore, it attracts people who like that type of environment. So these are some of the good arguments. Actually, before I go to bad arguments, Michele, maybe I throw it back to you. So on the positive sides of meritocracy, does this resonate? How does it resonate with your thinking? Do you want to add something?
I think this makes sense. I mean, to me, like the notion that you want people to be rewarded for their contribution, irrespective of social rank, of demographic characteristics, of height, or other looks. To me, it's hard to argue with that. Like, how else would you award merit? The key question, or how else would you reward impactful contributions and create the incentives for those? The question is, how do you measure merit, and who is meritorious? And we'll come back to that, because I think the big problem has been that we've just conflated the issue of merit with credentials, and we've created this very elitist view of how value gets added, where we've assumed that value gets added by a few people who are working super hard and have all the power, as opposed to thinking, well, maybe value can get added collectively, by aggregating the work of many people, right? So anyway, so we can talk about that. So to me, it's like, and I know people joke about this, that it's not that the communism is bad, it's how it was implemented, that didn't work out. But I do feel like that's actually true in the case of meritocracy. Like, as a general principle, I can't argue with it, but I can certainly I have my doubts about whether we've used it in the right way, Glitch. And
I think Adrian Wooldridge was, and I think I was listening to a very interesting, and it might be online, session with the Policy Exchange in the UK, interviewing Adrian Wooldridge and 2 or 3 of the leading philosophers, management scientists, and they came exactly to your point. That is a it's very hard. It's very easy to criticize, very hard to find something better. But what are the criticisms? So here are, and you can see there are lots because the font gets very small and kind of, someone suggested to me once, you shouldn't have a slide with more than 100 words or so. So I'm breaking all the laws here.
Hey, Alti, I don't want to, you're German, right? Originally?
Yeah.
So I don't want to just like be like, and I know Jochen is on the call too. But I remember when I was working in McKinsey, when people saw slides like these, they called them German charts.
Yeah, I think that's it. I think it's probably true, right? As an engineer, there's also pride in that, right? So there was some kind of, initially when I started my career in consulting, I would have as much information as possible and always start my presentation with some very complicated graphs. But here my only excuse is that I only had about half an hour to wrap up about 20 articles, and I didn't want to deprive of the information. So take it on the website. I will only point out a few things to nurture the conversation. So one, there's a notion that meritocracy, unfortunately, in practice, always leads by its very nature to a very few having a lot of power. And this notion that kind of, if you select one, you deselect a lot. And I think Michele already touched on that, right? So there's in the original idea of meritocracy, it's very individualistic. And in practice, again, if a few people have power, the step towards trying to maintain that power is, of course, very close. And again, the challenge here is that it's actually, in the end, not who has merit, who is in positions of power, but those who decide what the definition of merit is. And guess what they decide? They decide that what is merit, what they have themselves. And then you get into deep trouble, right? So that's one of the criticisms. Then I already pointed out the rich elements. So there's social injustice being perpetuated through that. There is a destructive element to this, where some people argue that even the rich have to kind of work their asses off to be able to become what's the right word? Progress in a meritocratic system. So there are some statistics that show that in a good law firm, in the 1960s, you worked about 2,000 hours a year. I hope that's a year, or it could be a month. I need to do my calculus. But in a nutshell, 10 years ago, it's double. Right, so the amount of effort that you have to stay in to become get to the positions of power or status in this type of system is becoming extremely problematic. And I think, again, Michele shows in the book some of the statistics. So latest one from the ILO, the International Labour Organization, suggests 74% of the people in the UK are burned out from work. The Germans actually claim 80%. And Jeff Pfeffer, I think, is suggesting that the paycheck in his famous work is already the 5th leading cause of death in the United States. So there's an kind of an argument that it leads to ever greater investment into stuff, and also stuff that is actually not really what you want to do, but only what you need to do in order to get return on those many thousands of dollars that you've invested in getting into the race in the first instance, right? Merits, the measures of merit, I think Michele touched already upon, and I will leave it there, but you can see here, it also potentially creates bias, again, especially gender bias, but also against people who are coming from a less able stance in society, right? So they might not be really benefiting from the way merit is framed, as Michele said, mostly in qualifications. Performance pay. I'm not even going to start about performance pay, because what you often find in meritocratic systems is, of course, who works most and performs best gets most money. And I think we have so much evidence to show that intra-company competition is destructive in terms of psychological safety. And I will challenge Michele on that in a second. Inequality, societal dialogue, I touched upon on lack of true participation. So there's also, and Rachel just pointed that out in regards to Zappos on the chat, there's also a degree of thinking that meritocracy is not even democracy, right? It leads to a few people who are allegedly the best on whatever standard to make decisions, and everybody else has just to comply, right? So how do we get to, and Michele, I'm going to put these challenges to you, to a system where we don't get to some kind of system where very few people have autonomy and decide can decide who has got the slide sharing rights on Zoom, and everybody else is just sitting there waiting to hopefully get a hand in. And I think with that, there's a lot more on this, as you can see, but I'm going to stop. Actually, I'm going to leave this on for a while so you can study it if you want to. Michele, what are your responses to some of the challenges here in regards to how you see it?
Yeah, I think these are good challenges. I think they presume that a meritocracy can't be something that is dynamic, where your power and your influence waxes and wanes depending on your value add, which we'll get into, right? Because you can have a system that's very meritocratic, like where if you don't add any value, you stop being part of the elite. I mean, the problem is that we've created a system where the elite self-perpetuates, right? In society, in organizations. But think for a second about YouTubers, right? So I'm not, I have to confess, I'm not a huge like follower of YouTubers, but if you don't start, you could have like 5 million followers one week, but if you stop like posting good content, those people are going to go away. They're going to follow you, right? So like, I think YouTubers or the PGA Tour, if you're into golf or any other professional sport where there's ranking, that's a meritocracy, right? But like, if you're number one in the world, if you're Rory McIlroy or Tiger Woods or whatever, and you stop winning, you fall. So the question is, how do we create a system where there's much more dynamic? So that would be one thing.
But on that one, Michele, can I challenge you? And I'll ask for some help from John on the chat. I mean, we have looked at performance management, right? And even with the famous Archimedes or whatever was called Aristotle study in Google, right? So there doesn't seem to be any successful way of assessing performance of an individual in an organizational system with any accuracy whatsoever. So kind of how would you, I'm not talking SAT scores also, right? But
but
is there not a challenge with actually understanding who is well performing and who is not?
Well, so we can get into it a little bit, and I'd love John's input for sure. But a lot of the companies that do this well do it without like 5-dimensional competency grids, HR framework, whatever. It's actually pretty simple. So in some cases, it's like the customer is evaluating whether you're doing a good job or not, and whether you're worthy of getting compensated and getting money, or even more than you're getting a bonus. So, hire is very much like that, where, I mean, Zhang says everybody reports to the customer. Like, I don't have to decide, like, did you do a good job? Where are you on the distribution? It's like, is your micro enterprise doing well or not? That's all I need to know. Like, actually, I don't even need to know that, because there's a system that.
But you need to make 1.5 times average. You need to do 1.5 times the average of the sector.
There are some clear benchmarks, but anyway, so Nucor, by the way, steelmaker, completely different industry, has a similar process where you get paid. It's a collective. It's a lower than average base pay, but then your compensation is heavily driven by a bonus. It's a team level bonus on production, and it's based on number of tons you ship out of the mill safely produced. So like, if there is a safety incident, you don't get the bonus, but and it's a very clear formula. There's no upside. So again, if you're productive, if you're applying your ingenuity, you get paid. Like, no one's assessing you or calibrating you or whatever. It's it's a very kind of objective system. And then the fact that it's a team level bonus, make sure that there's a lot of peer pressure to do well, because like, if your compensation is affected by someone who's incompetent, you're going to drive that person out, right? Pretty quickly, right? So there's no room to hide or play politics. So that's one other model. The other two models, which we can get into, in a way, crowdsource employee feedback in a way that makes it much more complete. So the problem with the bureaucratic approach to assessing performance is that it rests almost entirely on the opinion of your boss, right? And that creates all sorts of like biases and weird dynamics where you're trying to please that person. You're not going to say anything bad about what they're doing. And that person, if they hired you, and there are plenty of studies that show this, like, if you hire the person you're evaluating, you're going to have rose-tinted glasses when it comes to performance evaluation. So you need to basically divorce performance management from the hierarchy. And two quick examples, which we can get into if you want. One is Gore, where they basically have this system where you have an exposure list, 30 people you might have worked on over the course of the year, right? And you indicate that, and then those people need to basically rate you against other people that they've worked with. And these are like pairwise comparison. And again, it's not some sort of like HR 5-dimensional matrix. It's like the question is very simple. You have John and Jane, right? Who has added more value to the firm this year? Literally, that's kind of like it's at that level. It's maybe not exactly the worded that way. And you do these pairwise comparisons, and you kind of keep going through the list of people you worked with. And at the end of that ranking process, which and then there's calibration and other ways they adjust it, but you get a fairly robust picture of who's added value, right, in the firm. And Bridgewater does something not quite the same, but they have this like dot collector app that they use where you constantly rate your peers in meetings and other interactions based on a set of criteria. And at the end of like a year, you might get 3,000 ratings, 5,000 ratings. And again, like you get a crowdsourced picture.
But is that not terrible?
What?
I would feel terrible. I mean, so one, as an executive, I spent millions of hours in totally unnecessary, unfruitful ranking and performance management meetings, right? Where frankly, it was the most hated session throughout the year, right? Where people would come in and judge you somehow. And I almost feel like you said earlier, right? This kind of almost surveillance by technology or colleagues who kind of rate you on every bloody meeting that you make, and if you make mistakes out there and so on.
So Bridgewater is a very unique culture. I guess what I'm saying is there are different ways of assessing performance that are far better, and some may work in some culture with some people, some may not. They're far better than just relying on performance management traditionally done. It could be the customer, right? It could be the customer in the marketplace, or it could be your peers, done in some kind of robust way. And the number of companies that do these kinds of things is like 0.1%, which is of all the companies, especially large companies, right? Which is why a lot of these companies aren't meritocratic, why a lot of these companies, politics and other ways of advancing are really the name of the game, right?
And is there not I'm taking the point from the chat here. I'm sorry, it kind of got off. I think I'm playing devil's advocate at the moment on purpose, right? Because some of your views I totally share. But on one of the points on the chat was that kind of, again, to your earlier statement on merit, right? So I see the zero distance element that I think Rendon Hayi is also turning towards the customer, right? So let the people that we contribute value to judge us. But I think the point on the chat was, so let's assume we are all in the team. So there's team Michele Orti and the 20, 30 people on this call. And there are a few people who are not really contributing to the customer in any shape or form, but they're maintaining the team, right? So they're the typical people who will make sure that we all feel well and so on and so on. So there's no direct relationship in anything that the customer would see or judge on, but still, they're probably valuable in terms of creating the culture, creating the good working conditions for all of us. And also, again, there's probably this notion of flourishing at work might be all of us learning from each other, being in a good community, and so on, which is very hard to capture in metrics that somehow relate, like John says on the chat, to production or something of the number of widgets or so that get produced, right? So is there not something, to your point, which is very difficult with meritocracy, the moment that we connect it to an extrinsic motivator, quantitative results of any kind, that is not necessarily taking into account some of these other factors? Because I think meritocracy is a good idea, but the embedding in something which is materialistic, individualistic, or solely focused on short-term results or so is really where the problems come in.
Yeah, so I think teams realize. So when I say people, the customers are valuing your performance, in some cases, it actually may be literally they're evaluating your performance. And so I'll just give you an example. I went to a factory in China, and the guy, there's a guy welding an air conditioner, and there's a monitor next to him, and there was like he had like a 4-star rating, and that literally from basically the customer, they trace like your it's built to order. So the customer, might say, oh, this like fan, it's noisy, maybe it wasn't assembled properly or wasn't welded properly. And that feedback about that particular product gets played back to the individual in the factory. So that's one way to do it. what I was actually, and I'm not saying that's the right way to do it for everyone, but there is a, if you're doing, if you're getting customers and customers are happy, and you're thriving, and you're generating a demand for your work, that's a sign that you're doing well, you're creating impact. And so it doesn't have to be a particular metric or a particular individualized comment from a particular customer to a particular employee. It could be to a team, like even at Buurtzorg, right? So they have teams at Buurtzorg have a particular catchment area in which they operate with. They see patients. They recognize that not everybody needs to do all the things. They have these roles within these teams, right? And same thing at Nucor. And some may be more like administratively minded, others may be whatever. They have different strengths. But at the end of the day, like if the team is like, if customers are not happy and they're walking away or they're not growing their patient base, that's like a sign that that team is not doing well.
But right? They have no performance rating in Buurtzorg. And also, I think talking to the person who's actually accountable for the culture at Buurtzorg, I think this notion of trust is extremely strongly embedded, right? So again, she was saying we will never come up with any sort of rating mechanism or contracting like in holacracy, because that would erode the trust that people have in each other.
Yeah.
But on the other hand, like you say, if people are failing the trust of their colleagues, they will probably very quickly be.
Yeah, Nucor is the same way. Nucor is the same way. They don't have any internal contracting or any individual rating.
And I think Colin is also Colin is suggesting peer reviews in some shape or form might be the only way to go in terms of assessing merit at a contextual level. I think John is suggesting this Bridgewater pointing system is actually available for Zoom.
It is.
And we can download it, and then we will get point from everybody on this call. So it is.
There's also an app you can download, Principles app, where you can do it as well. Yeah. But
I think there's also a problem even from the other side, because what I've seen, for example, Uber drivers, right, or eBay people on eBay. Right, so if they don't get their 5 stars, they get very strongly penalized in terms of the way their offers are positioned or what conditions they get for positioning their stuff on the platform, et cetera, or whether they get rehired and so on. And I think it almost creates an inverse kind of prisoner relationship where I've been seeing Uber drivers begging me for 5 stars or for not putting any rating in because the service happened to be bad or something like that. And I just think it creates this endless anxiety and competition, which again, kind of, because I as a client also might not be right in what I'm demanding or in how I'm treating the person providing the service, right? So I just wonder whether there's something in these mechanisms which really, maybe like you said earlier, there's something about kind of how we want to interact with each other, the humaneness of the interaction, the relationship being the most important between the people that are part of the same ecosystem, and some compassion and some kind of love for the greater good of maybe that needs to be superimposed over any such system, because otherwise it could always go wrong.
Yeah, well, yeah. Again, these, when you take any of these practices individually, you're almost always going to draw the wrong conclusion when you try to apply them somewhere else, because there's typically an infrastructure or other things at play that in a way mitigate, like the potentially perverse effects, right? So the reason why, like at Nucor, this doesn't devolve into some sort of anarchy or like atomistic competition is the fact that people typically spend a whole career there. They rotate across different departments. They have a view of the whole system. They're compensated for something that is a little bit more than just their particular piece. Everybody has a compensation element that is, focused on the next level. So if you're a production team, it's also about the plant and return on assets. If you're the plant leader, it's about, the division. If you're the division, it's about, there's profit sharing. There are, all these socialization aspects that happen. So it's, the trust, is deep, right? So yeah, none of the, or like, you can do the dog collector. And I would actually be, my sense is that if you do implement the dog collector in a culture that isn't Bridgewater, the way they, it's probably not going to work, right? Because it's not just about, people may not be very honest, or they may say, well, I'm going to screw that person, I'm going to give bad rating so that I can get the promotion, right?
Exactly.
So So you got to be a little bit careful, but I do think I'm pretty confident. Well, I don't know, confident is a strong word, but my sense, I mean, when you see data like this, let me show you one thing. You know, this is from the Bureaucratic Mass Index survey. We've done it with 10,000 people. You see data like this around the fact that most people, am I sharing the right screen? Let me see, maybe not. Hold on one second. It's basically about, you know, we ask people to what extent is like our bureaucratic, you know, political behavior is influencing who gets ahead in the organization, right? And you can see here, it's a nice relationship between size of the organization and a number of people who think political behaviors are prevalent. But when you see data like this, and you know, look, maybe this is not right. This is a perception, and the facts aren't quite the same. But the fact that people believe that, or at least report that, shows to me like we just have the wrong system. And we have you know, bureaucracy was supposed to actually, as you say, Oti, was supposed to get rid of nepotism and the idiosyncrasy, right, of when it comes to evaluating who's doing a good job. But we've just in a way forgotten that bureaucracies, even though they're supposed to be instruments of rationality, are populated by people we're human beings, right? Who are not always rational, or who succumb to all sorts of biases, right? And I think the other problem that we face is that, you know, so we have exaggerated competence. We hold ourselves to, we all think we're better than average, right? So that's the problem. We misjudge the competence of other people, right? So as I mentioned before, like if you hire certain people, you're going to be much more lenient on them when it comes to promotion. And then we overweight competence and say we overweight. I think this is an important point: managerial capabilities over other skills. And so somehow we assume that the coordination and control and direction setting can only be done by managers. Oh, and therefore they're like adding a lot of value. Therefore, they need to be paid a lot of money. While, you know, a lot of these companies we talked about, they have very few managers, because guess what? That competence, administrative competence, can be distributed, right? And so if you get rid of that, you know, you get rid of a big chunk of the problem, right? Because a lot of the inequality and a lot of the meritocracy has to do with this rise of this managerial class that is claiming in a way that they have all the answers, and they're indispensable. And my answer would be, yeah, maybe you're not as indispensable as you think you are. And if we reimagine our organizations so that, you know, this kind of you know, competence around administrative abilities, you know, is something that is distributed, we might get rid of a big chunk of the problem. So anyway, I have to, you know, we can talk a little bit about how we then solve the problem, but let me see if you have any reactions to any of this, Oti, or
I love it. And I have to make a confession, because I mean, I only had 3 hours sleep tonight, and somehow I thought we were good in time. Whereas we started at 16:30 CT, not at 17. So we're actually already 2 minutes over. So
okay.
What I would suggest is the following. I don't know what your calendar looks like, Michele, because I know you were time constrained today, but I am happy to stay on for.
I can go longer. I can go another 15 minutes.
Cool. So what I would suggest we do, for those people who can stay, please stay with us. If not, feel very free to get the recording from the website. If you can, please register on the website. We will then inform you when the video is out there. And also we'll ask you for some opinions on how we should structure these things and whether we should have more interaction or anything else. What I would suggest, Michele, one, I fully agree on the points that you just made, which I think you were driving also in your book towards, that bureaucracy mass index, and the problems with meritocracy might not be perfect, but if you go to positional power structures where people are starting to not be meritocratic at all, look at the cost of that, right? So I think it's an interesting one. So I would suggest, if you want to dive into that for another 3 or 4 minutes, and then we open up for Q&A, because Katie, Colin, Lisa, John had some really nice challenges on the chat, and I would just invite them all in to give those challenges back to us, or just share their views. But maybe if you want to conclude that you had some other interesting slides there.
Well, I don't know if they're I don't know if they're interesting, but I guess just to try to make this practical for whatever it's worth. So, like, you know, our view is that there are, you know, at least we talk about this in the book, there are 4 things you got to do to create more of a meritocracy. So you got to, you know, separate, you know, de-bias judgments about merit, right? And that means, finding other sources of input, whether they're, market driven, peer driven, whatever. Second is make sure that then you align influence with those with those findings. Like, one thing that, I don't know if you're familiar with the work of Rob Cross at Babson, but he's one of the kind of pioneers of applying social network analysis inside of firms to find out who are the connectors, who are the really influential people. And time again, he finds that the people that are really influential are not necessarily, the people at the top of the organization. They're not even people that are, identified as high potential, right? Whatever that means. But so there is this mismatch. But then what do you do? Like, how do you get those influential people to have real share of voice when it comes to the organization shaping its priorities and whatever, right? Then not only do you need to give them influence, but you need to kind of ultimately compensate people for their contribution. And so to me, like, an organization where there's a near perfect correlation between hierarchical position and compensation is an organization that is not meritocratic. Because I can't be convinced that only the people at the top are the ones that make the biggest contribution. Often it's not at all like that.
And I mean, again, think about the culture, right? I mean, what it brings up with me is this ABC stuff that Jack Welch invented or used, right? Yes. Where kind of separate the cluster into ABC and then get your B players to become A and fire all the C's, and then it was supposed to be 20%, 80%, 20% or something like that, and it drives to these forced normal curves and so on.
Yeah,
I mean, it wasn't pretty.
And then Ram Shriram and other people, including the former MD of McKinsey, talked about the fact that there are basically 2 or 3 people in the organization that drive value, and everybody else should be like stuck doing like operational work and not worry about big topics and big things. To me, that's like such an elitist and wrong way to do it. And to just conceive of how value is created. I mean, you might end up creating an organization that is like that, but there's no reason why that ought to be the case. Just very quickly, very quick aside. Another book that is by Meritocracy, I don't know if you read it. It's called The Tyranny of Merit by Markowitz, as a Yale professor, Yale law school professor. Yes. But he talks about, like, he takes one example of loan officers, how loan officers in the U.S. in the banking system, where had authority, they could make loans, and they could exercise discretion and so on, and how that's basically been stripped away, and now it's all centralized in a few positions, that are making all those kinds of decisions. And then those people are reduced to like basically being salespeople, and they get paid much less for that because they don't adding value. But like contrasted with Handelsbanken, where loan decisions are still made locally, right? So like the fact that this is happening in some banks doesn't mean that there's some sort of natural law, like physical law that makes, we this kind of polarization is inevitable. No, it's not. It's how we design our institutions, right? Which brings me to my last point.
Whereas I think Markowitz comes to the point, indeed, that the only way is to redesign institutions, reinvent, kind of redistribute power, so that there's actually no need to get into this shadow world of meritocracy. And I think there's something here between the Taoist Eastern thinking and the typical Western analytical thinking, where this whole system somehow gets dominated by kind of thinking of us versus the others. And I think that is, to a degree, at the bottom of some of the problems. If we all feel David Bohm style, that we're all part of kind of the same and separation is an illusion, then I think it starts with a very different mindset in going into these methods.
Yeah, I agree. And so that brings me to my last point very, very quickly, and I'll shut up. And I'd love to hear what everybody else has to say. Is I kind of alluded to this earlier, that we don't think a hierarchy of merit goes away, but you can build it very differently, right? And you can build it one that is natural, that it's built from the bottom up, and it's peer tested or it's customer tested, whatever the hell, however you build it, and it's dynamic. So as I mentioned before, your ability to enjoy the spoils of merit and influence is completely dependent on your ability to continue to add value. And if you don't add value, you don't get to be meritorious anymore. And again, that's that doesn't really happen in traditionally managed organization, but you can conceive of companies, and indeed we feature several in the book where that's exactly what happens. Like, Zhang or whatever, they don't appoint the micro enterprise leader. The micro enterprise leader says, there's this opportunity, I want to tackle it. And then, off they go if they get some, they get some support. And if that micro enterprise doesn't work, it goes away. Now, again, I'm not saying hire is the model. I'm just saying there are alternatives, and we just need to, to me, like, instead of bitching about meritocracy, for part of my French, I think we should just try, and you should realize, A, there isn't much meritocracy in organizations, and B, we can work to build better versions of them in our organizations. So,
and I want to add, and maybe that is as a concluding remark, trying to summarize and then open for everybody who wants to join. I think your point earlier, Michiel, on embeddedness is still with me somehow. So I think there's a necessity to embed all these methodologies in some sort of mindset, which is making sure that we're not creating some monster that we didn't want to create in the first place. And here, I think there's something about kind of, in politics, we very often judge political systems by the way that they shape the people within them. And I think the same is probably a good judgment in terms of organizations. What type of people are we producing? Are we producing those people who burn themselves out 150 hours a week to kind of compete with each other for the best positions, and then stick to those positions for as many generations as they come, being lonely wolves out there and not getting any happiness in the end? If that's what we're producing, something is wrong. So I think the problem is not necessarily the method that we deploy, but as you said, having the judgment, having the wisdom, I think I said in your slides, to actually make sure that it all comes together.
Hey, Alti, just very one quick build. I think the problem is, though, structural, in the sense that if you are setting up career progression as a set of promotion tournaments where you're competing with other people for the scarce resource of positional power, you are going to get this toxic dynamic. And so,
we also have structures that we need to look at.
Right. So basically, you need to create an organization where power is not in finite supply, where power and influence are infinite, right? But that requires you getting away from this notion that progression in career is all based on you moving up the ladder.
Very nice. I think we should add that into the notes, where power and information and infinite supply, which of course, again, is kind of this idea of a perfect hypothesis, but maybe we should get as close as possible to that. Now, whoever's still there, I would suggest the following. Just put yourself, if you're comfortable to be recorded, just put yourself on video, join in, and then we will just do a round of remarks, or if you have questions, that's fine, or anything that you want to comment on, because there have been some really nice comments, and thanks for that on the chat. I hope we can capture that and make it available, but I would very strongly invite, I mean, Colin was there. I don't know who had still had time to stay with us. John, Katie, if you want to just come on video and just add one sentence from your side, please do so. Seth is also there. If you just want, guys, I cannot see you on. There we go, on the gallery view. Just go anywhere you want.
I made a remark about, I've got a problem with how you assess contribution. And what about the glue guy or the tea lady that goes around, and that, these are the people that often get pushed out when there's cutbacks, but they're the ones that make the whole thing gel. That's where, their contribution is somewhat indefinable. How do you pick that up in a meritocracy?
Very nice. What I will do, Michiel, if you allow me, I will go around the table, make sure we get every question heard, and then point to you for wisdom.
Well, you can answer these questions too, Artie.
I will, but I think you are much better prepared. So on the organizational side. So Colin, Katie, John, do you want to add to it?
I just have a comment, and Michiel, in speaking to what we do, particularly from the U.S. side on the climbing the ladder. I'm an example of that. Over 21 years, success was corner office, and I'm not there. Walked away 5 years ago, so because something's missing from a human element. I have no answers. It's just what you guys are talking about resonates with me so deeply. I just want to
Thank you.
figure out how to really impact change here in the States. It's a monumental task. So I don't have anything other than I'm going to be a groupie watching you guys.
Thank you.
And the recovered HR lady, Katie. So thank you for that.
When you
Talking
talk
about HR ladies and recovery, John, it's, I mean, wonderful to have you here with us in interaction. You had lots of points there, so please add. And I don't know, Michele, if you know John. John has written extensively about
Sure.
especially HR and teams and hybrid and mesh structure. So John, please share your wisdom.
Yeah, Michele's and I have bumped into each other over the years sometimes as well. Yeah, I've not really got anything to add. I mean, you know, as you were saying, it was a really interesting conversation. So I obviously contributed to the chat. Just in terms of Colin's point, I mean, I do. I mean, there's a lot of important things we talked about. I agree that sort of glue role is really important. I was trying to find it. I've not been able to hunt it down, but there was a really interesting article in HBR about 5 years ago. I think talking about sort of community-oriented behaviours, you know, doing the washing up and making the tea and all of that sort of thing, and pointing out also there's a big gender difference in there. You know, men won't touch it, which helps them get promoted. Women do a lot of it, and it's just not recognised because it's sort of again, it relates back to that performance point. It's very intangible. Organisations don't focus on it, but if it didn't happen, you know, again, to me, that's the you know, we obviously touched on Hire with the way that their technological platform makes that organisation work. Most traditional organisations don't have the technological platform; they have a cultural platform, and it's that glue which is the basis of that platform to work. So we're discounting the very behaviour which is central to those organisations, and in today's age is it's their one competitive differentiation. It's what Hire doesn't have. So it's, you know, it's a real danger not to.
Oh, I think we're breaking up a little bit, but excellent, Michele, back to you.
No, I totally agree with John and Colin. You know, in the sense that, you know, Jody Hoffer-Gittel, who's an academic at Brandeis University, talks about relational capital, which is basically the glue that holds people together, irrespective of rank or position inside a company. She did a lot of work. I think her PhD research actually was at Southwest Airlines, where she did a lot of deep work. And if you look at, you know, the reason why they're able to turn a plane around in 23 minutes, like far faster than everybody else, is because everybody pitches in, right? So the pilot goes and picks up the trash or cleans the seats or whatever, or puts the bags on the plane, right, with the baggage handlers and so on. The status differentials are incredibly low because people feel like they're part of a community. And so, but to me, that's not, and you know, and this, take this for what it's worth, Colin, but one of the managers, and there are very few managers, at one plant in Nucor, I visited in Arkansas, basically said, I think they have 8 managers for 1,500 people. He said, being a manager is the least noble position at Nucor. Which, you know, they still get paid more. So like, let's just be real. But I think he wasn't just being, he wasn't exaggerating. There's a deeply cultural belief that every person matters, every job matters, and the jobs that are closest to the production line, the most humble jobs, the person that, you know, uses the little rod to like stir, you know, the melted iron and whatever, you know, that's where the action is. That's where the worth is. And so they're trying to do everything to elevate that person. So it's not this, and I think you can combine those two ethoses, right? The ethos of community and of deep interrelationships with the ethos of meritocracy. And it is a bit of a paradox, but I think you, in a way, you kind of have to do both to be successful.
Exactly.
Yeah.
And I think it's very striking that in your 5 or 6 principles in the book, you got both. And I think for me, whilst it's easy to list them both, but make them compatible and make them almost like a helix where they enrich each other and people co-elevate, as Keith Ferrazzi says. Right? I think that is the trick to a degree. And I think there has to be, and again, I will point at John for the performance management stuff, right? I think there has to be a degree of humility and wisdom, like you said, Michele, in terms of attitude. I think there has to be a little bit going away from this cherishing of negative freedoms that we have in this very neoliberal kind of societal view, going back to walls of the social contracts where we all are self-optimizing and that's all that matters. Like you say, the relational capital, I think, has to come back in. It brings me back to Putnam and his view on upswing, right? We've turned from the we to the I society to extreme, right? We only care about ourselves. And I think maybe that more than any technique is the problem. And one thing, John, that I find interesting in terms of performance management, right? So yes, I think higher in the micro enterprises, the 4,000 or whatever, is still very focused on being 1.5 times performance of the sector, whatever the respective sector is. But I think for the contracting that they create, which is always embedded in ecosystems, these enterprises of these ecosystems of micro enterprises, where also outside the firm enterprises can contribute. There's always a very strong incentive to contribute to the common desire of the ecosystem, right? Which I think, again, is something that maybe other companies can learn from, because frankly, I can create my own ESG or CSR or whatever report as any company. I cannot by myself solve any of the big challenges society or the world has today. So I need to step beyond, and I need to create ways to actually be interdependent, right? Both as an individual, but also as a company. And I don't think performance management today is anyway close to kind of cracking these nuts. But in your masterclass, John, so how far have you come in reforming traditional performance management? Is there any hope? I think you're on mute on purpose. Because
yeah, someone had to, didn't they? Yeah, no, I've got the answers to that. Yeah, I mean, I think organizations are, there are, I mean, you have a look at the sort of modern performance management apps rather than the sort of HR ERP systems. I mean, they all do sort of crowdsourced feedback and things, that's happening. In the reward space, I love apps like Bonusly that enable people to sort of do distributed pay, where a portion of what you get paid is based upon your
Can we follow up on this, John? Can you give us the companies that you feel are your role models in moving anywhere? Because we've gone through the Deloitte reports and so on, but I don't think these guys have cracked it.
No. I struggle with that. It is a question I've been asked before, so I know I should have a good answer. There were companies doing interesting things in different areas. I guess my struggle is twofold. Firstly, that I'd struggle to point to a company that said, this is they're excellent in everything they do. There are some companies that do one thing well and another company do something else well. And then the other thing is, again, as I was saying on the chat, to me, it always relates to, what their principles are and whether they're sort of cascading those effectively. Say Bridgewater, I wouldn't work for Bridgewater. It's just not my sort of company at all. But in terms of that alignment that they make between their HR and management practices and what they're trying to do, it's beautiful. I mean, there's no organization better. And if you take those principles and you cascade it down, then things like the dot collector is a perfect way of delivering what they want to deliver.
And there were, I thought, Bridgewater was part of Keegan's deliberately developmental organizations, right? So he put them on a pedestal as well, together with the Chinese firm in London and Decurion, right? So funny. Yeah. I never thought they were very developmental in reality, beyond the individual aspects. And Michele's point on trying to balance individual and community, I didn't see that with Bridgewater that much.
Yeah.
No, not at all.
And I think, Michele, the other point, and coming to a close, but your graphic showed also the perception of a lack of meritocracy was kind of dependent on the size of the firm, right? So I think, again, smaller firm, we have some good examples. Bigger firms, not so much, right?
Which is why you need to typically, a good idea is to divide your big firm into a lot of little firms, and then find, which is what Hire does, which is what Nucor does, which is what Berkshire does, which is what Southwest does in a way with its airport crews, which is what basically all these Handelsbanken does, right? That this aggregation is a really important part, because the people best placed to and disaggregation that is as much as possible customer facing. Because that you know, so that it's, I don't think it's an accident.
Very good. I think, I mean, we've explored, I was excited about today's session. I think I've together, and it was really nice that you all could jump in, right?
Yeah,
There's so much
thank you.
knowledge and wisdom. I think we have, we've done a little bit of
Have we solved the
exploration.
problem? Have we cracked it?
Do we get the dot? Do we get the dot?
Yeah. Let's well, we should install it. Seriously, if we can find, and then for the next one, we should just do it and use it. And then
Oh
people
my
think it's like-
God.
I can start
I'm
reading through
gonna
and
be anxious. I'm not going to sleep anymore before
no,
these sessions.
you
We're
know,
gonna do-
we'll reach an agreement prior to this so that it's all staged out, at least between the two of us. I don't know. All
and
right.
then after kind of, if it's less than 3 points, what's happened? Then we get,
Exactly.
they get fired, and then Mikhail is going to do the show by himself.
Oh, geez. Well, listen, thank you so much. I'm sorry that we ran long, but hopefully it was, for those who stayed on, worth your while. I don't know, Artie, we haven't talked about it. I'm going on vacation next week, be gone for a couple of weeks, but if you guys are still up for doing more of these, let us know and we'll get the show on the road maybe later this summer.
Super. Happy holidays, everyone. Thanks for coming in, and speak to you soon.
All
Stay
right,
radical.
bye.
Ciao.